Hey guys, welcome back. So in this video, I'm going to answer the most asked question by far lately, which is how to short crypto. I got that question a lot when we were in this in this bear market here. It lasted around a couple of months or something like that, and I got that question a lot. I made a video back then answering this question, but all videos don't get any views anymore because it's like time related. So I'm going to make another video answering the same question. I cannot tell you where you can short or not because there's different rules and regulations for different countries. I can only tell you the platform that I use personally to short crypto, and I know this one is not good for the United States. This one is good for Europe, and it's called Plus 500. You can download the software from plus500.com. Let me write this for you here. I'll get rid of these lines in a second, but this is plus500.com. Okay, this is just a normal broker that it's actually for trading the regular markets, traditional stocks, forex. It's just for traditional markets. Is the only platform, the only broker I ever used since ever I started trading markets, which is way before I started trading cryptocurrencies. But they added cryptocurrencies some time ago. I don't know exactly when, I can't remember, but I remember they added Bitcoin some time ago. And I think only last year they started adding other cryptos like Litecoin, Bitcoin Cash, when it was released in August. I think they have Ripple, Ethereum. They have the main cryptocurrencies there. So if you download this software from, it's just a normal broker where you can trade regular markets and some cryptocurrencies now. And this is what I use for shorting cryptocurrencies. I have never shorted cryptocurrencies using normal, crypto exchanges such as Poloniex, BitMEX, or any other. I don't know because I've never done it yet. I might do it soon, but for now I never used crypto exchanges to short cryptos. Therefore, I'm not going to explain how to actually do it. I cannot tell you, well, you have to click the button on the right, and then to set your stop loss is going to be the button on the right. And no, I don't know because I don't have accounts there, so I cannot tell you how to actually, where the buttons are on the screen or anything like that. You need to do something on your own, do your own research, see what exchanges are good or available for your country. You need to do your research in that. I can only tell you how to do technical analysis for shorting. All I can help you with is teach you how to do technical analysis for shorting, just like I do for longing. But when it comes to what platform to use, I cannot recommend any because I don't use any other than this one, Plus 500. So I know it's more difficult for people in the United States because of laws and regulations, but I know you can still do it. I have some guys in my premium area. I think they short on BitMEX, and you can do it on BitShares, I think, as well. There's some exchanges where you can short even if you are from the United States. So, but I'm not going to tell you which ones. I don't know because I don't use them. So you need to do that part on your own, and I can only teach you, technical analysis, how to actually spot good entries and targets. So let me hide all this mess. It's very, very simple. I'm not going to go into a lot of detail here. I said this before already, but I'm going to repeat it for this video. I'm going to be doing more videos for shorting, technical analysis on shorting, how to get targets and entries and targets. But it's a very, very simple. It's exactly like exactly how you do it when you go long, but you just have to inverse. So basically, to go long, the strategy that I use, my main strategy is moving averages strategy. Again, there's many other strategies, but of course I have to teach the one that I specialize in. So I try to do swings, like a little bit longer term swings. I don't do day trading, but this would apply in smaller time frames as well. But I use the daily candles as my main time frame. So I go long when the moving averages cross bullish, like in here, for example. Of course, I don't enter exactly when they are crossing. If I can spot, if I can see there's a cross that's very likely to happen soon, then I will enter earlier, a little bit earlier here, so I get a better entry. Of course, I look at patterns, volume, and I use a combination of indicators to give me the best entry possible. But even if I was not looking at indicators, my main signal is moving averages crossing. For example, here they crossed and the price was all the way up there. I would not enter after such a long green candle. I would wait for a retracement and then enter. You see, I wouldn't enter right at the cross. I'm gonna do it so that I enter a little bit earlier or a little bit after, just to get a better entry. But just take this as your main signal to enter long. And what do you do after that? Once you enter, you just hold on to it. And then if you want to increase your position, then you wait for the price to retrace, touch moving average, and when it's touching moving average, then you buy on the bounce. So in other words, you buy the dip. You buy the dip so long as we are uptrending, so long as the price is above moving averages and both moving averages are uptrending and in sequence. In sequence means the shorter moving average it's up and the longer moving average is down. And if I was using 4 moving averages, then it would be in sequence in this order. This would be the 20, the 50 below, and then the 100 below, and then the 200 below. So long as they are in sequence, they're not crossing with each other, it means we are uptrending, and then it's good to buy the dips. You buy the dip and can continue to hold until when? Until the moving averages cross bearish, and then you exit. Here you would have exited, so you would have entered here, you would have been increasing your position here, and then you exit here. Again, you don't do it exactly when it crosses, because if you do it exactly when it crosses, it's going to be all the way down here. It's not a very good exit, but in my case, I was making videos then. I sold on these 2 bounces because it was obvious after this crash there was a huge red flag that a bear trend could. It was very, very possible that it was going to happen, especially given this, this crazy rise here, $5,000 up in 2 days. That's a huge red flag. So you see how I don't exit exactly at the cross, but a little bit earlier in these 2 bounces. So, but it's the main signal. Now for shorting, it's exactly the same. So you open a short position when the moving averages crossed bearish. So you would have entered here. This was actually a good time to enter when it was bouncing into the cross, and then you would have held your short position. And then if you want to increase your position, then you wait for the price to bounce, and when it's touching moving average, you open another short position or increase your position. You short when it touches moving averages and it's reversing back down again. In this case, it went, it passed moving averages, but it didn't last very much, and it's again going back down again. So during bear trends, downtrends, what you can expect is the price to bounce off moving average and go lower, bounce off moving average and go lower. Just like in uptrends, it's the same but opposite. It bounces on top of the moving average and then it goes higher, bounces on moving average and go higher. And just like when you are longing, you buy the bounce on the moving average. When you are shorting, you do the same but opposite. So you short when it bounces off moving average and when it's reversing. That's a very very basic explanation, but it's the general, it's just the general strategy how I do it. You not only using moving averages, of course you need to be looking at patterns, but the patterns are very similar, going up or going down. For example, if it's going up and you see like a sideways movement, you can assume continuation, and continuation means we're going to continue up. You see, we had a flash crash here, a big drop, but then it recovered. And what happened here? It went sideways for several days. When you see sideways movement for several days, you assume continuation. It'll pop up again. here again, it went sideways, sideways, sideways. You need to assume continuation. Once it breaks out this sideways movement, it usually will continue higher. Until when? Until you are wrong, because there will come the time where the trend will reverse. And the reality is you just don't know when the trend is going to reverse on you, but it will happen eventually. And when that happens, say for example, we are here and we are forming a continuation pattern, you assume continuation, that it'll go up, so it goes up, but then it reverses, bang, and it hits your stop loss. Well, when that happens, then you can start to assume or anticipate this might be the end of the trend, and it might reverse. If we were coming from an uptrend, then you can start to, to assume we might be going down for long term now. So here you start to change your strategy. You stay away from the market, you just stay away, just take profits in the bounces as much as you can. And when you have confirmations of downtrend, better market, which the main indication is this cross here, and after you see this cross here and all these, bearish patterns here and formations, now you start shorting on the bounces. When it touches moving average, you short. Instead of buying the dips, you short the bounce. I mean, if you want more specific targets and, real-time technical analysis, then you can join the premium group. I make videos daily on the website, as you can see here, selling in this bounce. I made a video when the price was bouncing right here, giving some targets and some scenarios. I update every day on Bitcoin and other markets there. For the free YouTube, of course, my videos will usually be a little bit later, but I will continue to make videos for shorting so long as we are in a bear market. I mean, technical analysis for, for short entries. So this is basically the strategy, guys. I'm gonna leave the video here because I don't want the video to be super long, but I hope this is clear. Thanks for watching and see you soon. Bye.